Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about TransAlta Renewables stock. This is a series of videos in which I will analyze the top Canadian stocks in green energy sector, and I will start with TransAlta Renewables. TransAlta Renewables is Canada's largest generator of wind power and one of the largest wind power producers in North America. In this video, I will discuss their business, their future plans for 2022 and beyond, their dividends, the risk associated with this company, and finally I will provide a detailed stock analysis using my personal discounted cash flow model and will then provide you with a fair value of this stock depending on your investment goals. The company HQ is located at Calgary, Alberta, and their shares are traded on TSX for almost 18 Canadian dollar at the time of recording this video. They pay a monthly dividend with a yield of 5.28%, and the market capitalization of the company is around 4.83 billion Canadian dollar. Before starting the video, I want to emphasize that I'm not a financial advisor, and this video is not a financial advice for you to buy, hold, or sell this stock. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. TransAlta Renewables develops, owns, and operates renewable power generation facilities across Canada, US, and even Australia. As I mentioned in the intro, TransAlta is Canada's largest generator of wind power, and they operate 23 wind, 13 hydro, 7 natural gas, and 1 solar facilities. However, 50% of the cash flow is coming from wind power assets, and 43% is coming from natural gas assets. And that's why I would consider TransAlta as mainly a wind power and natural gas company. They have a relatively good geographical diversity in terms of the facilities, and power companies usually have long contracts, which is great for the business. However, they have some issues with their wind farms recently, and their wind turbines was collapsed in New Brunswick recently due to design and structural issues. This is concerning not only for the balance sheet of the company at the moment, which they should somehow cover these losses, but also for the future of TransAlta Renewables. The company has plans to not only buy new solar or wind farms, but also develop various wind, hydro, and solar projects in 2022, 2023, and beyond, as we seen in the company basically Investor Day presentation here. The projects are diversified in various locations, which is good, and if successful, they will add to power generation capacity of the business and the cash flow of the company. The management really want to emphasize on the growth aspects of all these projects in their presentations, but in reality, you don't really see much growth in the business itself. For example, look at the distributable cash of the company in the last few years. The management called this slide basically significant increase in cash available for distribution, but I don't really see much growth here, particularly in the last 5 years. Not only that, but also if you look at the balance sheet, total assets, cash position, and total equity of the company went down in the last few years. If you look at the cash flow statement, you see a similar trend where the free cash flow actually decreases in the past couple of years. And while total revenue went up a little bit, net income and EPS numbers shrinking year over year instead of growing. I think the growth of the TransAlta was really disappointing in the last few years. TransAlta Renewables pay a monthly dividend with a nice yield of over 5% at the time of recording this video. TransAlta has not increased their dividend in the last 5 years, which is not great for investors. It's really funny that the management called this a strong dividend growth, but they did not increase the dividend in the last 5 years, and even then the average annual growth rate is only 3% in the last almost 9 years. I don't like calling something like 3% a strong growth, especially when other companies grow their dividend by more than 15% year over year, and even those companies does not call the growth rate strong. Unfortunately, there are many risks associated with this company and this stock. The first one is operational risk. As I mentioned before, the wind turbine incident in New Brunswick caused a lot of uncertainty for investors about other wind farms of TransAlta, as they may have the same foundational and structural issues which could lead to other incidents in the future. Another risk is lack of growth. The company has plans for growing the business but the growth history of TransAlta Renewables does not agree with the management. Lastly, I don't think the dividend is that safe, as the cash flow of the company actually shrinking in the last couple of years instead of growing. A New Brunswick incident can put more pressure on the balance sheet of the company in the near future, so we have the risk of dividend cut here. Of course, it's possible that the company can successfully manage these challenges and never cut the dividends and start to grow the business, but we should always be aware of this risk out there. This is my favorite part of the video, where I can show you my stock analysis based on the financial data I discussed in the previous parts of the video. I use a discounted cash flow model which basically estimates values for stocks based on projections for the future cash flows. So I make some assumptions about the growth of the company in the next 10 years and then discount the future cash flows into the present value of the stock based on my expected rate of return. So I start with the past 4-quarter free cash flow of the company, and based on 3 different scenarios, I predict the future cash flow of the company in the next 10 years. In the bear case, or the most negative case for the stock, the company can only grow 5% in the short term, and then the growth will drop to 2% in the long term. I could even put 0% as the growth rate here, honestly, but hey, let's be optimistic even for the bear case. I consider a terminal multiple of price to cash flow of 7 for this case, which is consistent with historical bear periods for power companies. For normal case, I considered a little bit better growth and a terminal multiple of 12, which is the historical average multiple for this stock. For the bull case, or the best possible outcome, I consider the business grows by 9% in the short term, and then the growth rate drops to 6% in the long term, which is really optimistic, and I consider the terminal multiple of 17, which is the bull multiple for this company. Now I assign a 50% chance to the normal case, a 25% chance to the bear case, 25% chance to the bull case. For growth stocks, I usually expect 15% return. For dividend stable stocks, I expect 10% return. If I expect a 10% return on my money from this stock, the fair value of the company is 8.30 Canadian dollar, which means compared to the current share price of almost 17.5, the shares are traded at 52% premium, and it is absolutely not a buy according to the model. It means if you expect 10% return on your money year over year, this stock is probably not going to deliver that 10%. And the only way you can make 10% money with this company is to buy when their shares are at least drops by 50% or more. It's always fun to see what analyst predictions are for a company, and according to Yahoo Finance, the analyst price target for this company is currently at $17.42 per share for 2022 with a hold rating, which means even analysts are not really that optimistic about the future of the company. There you are, guys. TransAlta Renewables gives you exposure to wind farms and their natural gas facilities across North America and Australia, but the business has some fundamental issues like lack of growth, poor cash flow, and operational issues. I would personally avoid this stock as it cannot provide 10% year-over-year return, according to my model. I hope you enjoyed the video, and if you enjoyed the video, please leave a comment and let me know which stock you'd like me to review next, and please consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.